Hey, what's up, everybody? It is Thursday, July 13th. Heading back to Florida tonight. Want to talk a little bit. I saw an interesting interview between Tucker Carlson and Elon Musk online on YouTube. I'm not sure when the interview was done. I think it still might have been when Carlson was at Fox News, but uh, and they talked about everything. They talked about artificial intelligence. They talked about, tech. They talked about Tesla. But the one part that I thought was interesting and what I want to kind of relay to you was they got into first. Let me before I say that. Let me mention that Musk. He's a brilliant guy, but he has economics and government finance wrong. I mean, he has the wrong understanding. He's obviously not an MMT guy. He has the wrong understanding. Like he was talking about how the government can create money and basically create as much money as it wants, and that's inevitably going to lead to inflation. And of course, if the government just, willy-nilly printed money to the point where it led to the total capacity of the total productive capacity of the economy to supply the goods and services represented by those purchases, represented by that demand, then yeah, it will result in inflation. There was nothing in his mention, and I think he was talking about that in reference to what happened during the pandemic, but he completely ignored the aspect of the supply chain disruptions and the closures of entire countries, people out of work. In other words, the shutdown of global production. So you got to be able to make that distinction. Also, he made a comparison between the United States printing money and Venezuela. And that's, again, he misses out on the distinction between Venezuela having debts denominated in a foreign currency, mainly the US dollar, and the United States, which is a currency issuer, and all of its liabilities, I'm not even going to call them debts, all of its obligations are denominated in its own sovereign currency, of which it is the monopoly issuer. So it's apples and oranges. It's two different circumstances. And a guy like him, he's smart enough to understand this. Obviously, nobody has ever explained it to him, and he's never read any MMT publications or books. That's pretty obvious. But most of these guys make that mistake. But I want to talk about what he said about the stock market, because I think it's very important, and these are sentiments that I have echoed and spoken about many times. And when Tucker Carlson asked him, well, how should people go about investing in the stock market? He said, basically, you should invest in companies where you believe they have good products and services and good management, and then you should hold on to it. And then at times when there is, when people get panicky and they sell the market down, you should buy more and more and more. The price of the stock doesn't always indicate the viability of the company. We know this, that the market fluctuates. I mean, I guide you guys, you people, through these ups and downs all the time on a regular basis. So I thought and you hold on to it, because ostensibly, you're buying into an enterprise where you feel, or it's been shown, that the goods and services produced by this enterprise are in high demand. They have some sort of competitive edge, and they're able to dominate the market. And that could be in many different ways. It could be sheer size. It could just be their innovative talent, their brain power. I mean, it could be a lot of things. But he's right about, and this goes back to something I talked about in a previous video, where I said Warren Buffett's partner, Charlie Munger, he was asked at one of these conferences, somebody asked him, well, when do you sell? He said, I don't sell good assets. I mean, as long as their valuation is good, and these are companies that I feel, we've done our due diligence, and they've shown, or they've proven themselves to produce products and services that are in high demand, and they have, some kind of competitive edge, whether that be size or the other things I mentioned, then you hang on to good assets. And I've always found in my life, because there have been many times where I had great assets and I sold out thinking, oh, it went up, such and such, and I'm going to sell out. And in retrospect, it was a terrible decision. And a lot of that came in real estate. I had memberships on various exchanges that I sold out, which, went up exponentially. So I learned a hard lesson about hanging on to good assets. But I thought he gave very good advice when it came to the stock market. I was surprised to hear, I thought he was going to say something about the stock market being like a gambling casino. Somebody's outside cutting grass. Every time when you guys used to watch me in New York, you'd hear like ambulances and fire engines and police cars. Now you got someone cutting the lawn. So he's right. I mean, you hold on to those assets, and, when it goes down, you don't panic, you don't freak out. He also said something which I think is very true, and something that I have spoken about many times, was the fact that, hang on, I'm going to close this window, maybe fucking shut up. That's a little bit better. Something that I've spoken about many times is that there's an inherent negative bias in the news. And that just doesn't go towards the stock market. It goes, in general. That those kind of negative headlines, human beings are predisposed, and I guess this could go back, evolutionary, just the animal parts of our brain, the very, the fight or flight response, the most important thing for any living creature is protection, is to save itself or get out of the way, get out of the situation if trouble threatens. And so that's a very powerful stimulus in our brain. And so it's almost like a natural reaction on the part of people when they see negative headlines. They're going to react to that. And it's also on the part of the media. They know that, that gets the clicks, that gets the views. So they tend to gravitate towards putting out that kind of salacious or frightening negativity. And so there's an inherent bias in that. And that's why I always say, fade the headlines. And that even applies when things are going fantastic and people talking about, maybe characterizing the stock market in a kind of euphoric way, like it's just going to keep going up and up and up. I mean, that's also something that you have to pay attention to, because that could be a period where you want to take some money off the table and wait for it to pull back. Anyway, it's a very interesting video. Fiscal flows are really strong. I didn't mention that. But I've been saying it every day, and I've been saying the dollar is going to go down as flows expand, as we came off of that June tax train, and that's going to be the case until around August 15th, and then, we'll peak out and we'll go into another period of drain. But anyway, that's it. I got to get packing and head out to the airport, and I guess my next video tomorrow will be coming to you from Florida. Take care, everybody. Bye.